Given the bullish price forecast for Bitcoin and the upward trend in historical prices, a long-term investment strategy appears to be favorable. The entry price should be around $101,000, which allows for potential profit as the price is expected to rise. A stop loss at $99,700 can protect against unexpected price drops, while a target price of $104,000 allows for a reasonable profit margin based on the forecast. This strategy capitalizes on the anticipated upward momentum of Bitcoin, aiming to capture gains as the price moves towards the predicted resistance levels. The long-term perspective acknowledges the potential for volatility in the cryptocurrency market but seeks to benefit from the overall positive trend. Based on the provided price history and forecast for Bitcoin Cash, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility, with a recent dip followed by a slight recovery. The forecast suggests a gradual upward movement, but it's not a strong, sustained bullish signal. Considering the support price at $518.70 and the resistance price at $546.60, a medium-term investment allows for potential price appreciation while minimizing risk associated with extreme market swings. Therefore, an investment strategy for Bitcoin Cash should involve a long position with an entry price around $530, a stop loss at $518, and a target price of $550. This approach allows for potential profit from the expected upward movement while protecting against significant losses if the price drops below the support level. The medium-term timeframe allows for the price to potentially reach the target price without being overly exposed to short-term fluctuations. Based on the provided price information for stacks, a short-term investment strategy appears to be the most suitable. The 2-week price history shows a volatile period with both upward and downward movements. However, the forecast indicates a slight downward trend over the next week. This suggests that the current price might be slightly overvalued and could potentially pull back in the short term. Therefore, an investment strategy involving a short position is recommended. A conservative entry price could be around $2.42, aligning with the current price and the recent support level. The stop loss should be set at $2.48 to minimize potential losses if the price unexpectedly rises. The target price could be set at $2.309, the identified support price, allowing for a reasonable profit margin while avoiding excessive risk. This strategy aims to capitalize on the anticipated short-term price correction in stacks. Given the price trends and forecast for Ethereum, a moderately aggressive investment strategy would focus on a medium-term approach. The historical prices show a fluctuating trend with both upward and downward movements, indicating a degree of volatility. However, the forecast suggests a gradual upward movement, with prices potentially reaching $4,220 in the coming weeks. The support price at $3,878.47 provides a safety net for potential price dips, while the resistance at $4,064.80 suggests there's room for further growth. Therefore, a long position is advisable to capitalize on the potential for a price increase towards the forecast target. A suitable entry price would be around $3,900, slightly below the current price and near the support level, allowing for a margin of safety. The stop loss should be set at $3,880 to minimize potential losses in case of an unexpected price reversal. The target price should be set at $4,100, aiming to capture a significant portion of the forecasted upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating potential losses. Based on the provided historical price data and forecast for Ripple, a medium-term investment strategy appears most suitable. The price has shown fluctuations over the past 2 weeks, but generally trends upwards. The forecast indicates continued growth over the next week, suggesting a positive outlook for the short to medium term. Considering this, a long position would be advisable to capitalize on the potential price increase. An entry price of $2.42 aligns with the current price and the recent consolidation period. The stop loss should be set at $2.34, slightly below the recent low, to protect against a sudden price reversal. The target price can be set at $2.70, aligning with the highest forecast price, allowing for potential profits while remaining within a reasonable timeframe. This strategy balances risk and reward, aiming for a moderate return within a medium-term investment horizon. Given the price trends and forecast for Binance Coin, a medium-term investment strategy appears promising. The historical prices demonstrate a fluctuating trend, with recent highs around $750 and lows around $676. The forecast suggests a potential upward movement towards $742 in the coming week, indicating a bullish sentiment. Therefore, I recommend a long position on Binance Coin. An entry price of $715, aligning with the current price and the lower end of the forecast, would be suitable. The stop loss should be set at $705, slightly below the recent lows and the support price, to minimize potential losses. The target price could be set at $750, aiming to capitalize on the potential upward movement towards the resistance level. This strategy allows for potential gains while managing risk through a well-defined stop-loss mechanism. Based on the provided price information for Stellar, a cautious short-term investment strategy appears most suitable. The 2-week price history reveals a downward trend, with the forecast indicating further declines. The historical prices suggest a potential support level around $0.424, while the resistance level is at $0.5543. Considering the forecast's downward trajectory, a short position could be beneficial. An entry price of $0.460, slightly above the projected lowest price, would allow for some margin of safety. A stop loss could be placed at $0.475 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.424, aligning with the identified support level. This strategy aims to capitalize on the anticipated price decline while mitigating risks through a well-defined stop loss. Given the provided price data and forecast for Toncoin, a cautious investment strategy would favor a short-term approach. The historical prices show a slight downward trend, and the forecast suggests a continued decline in the coming week. While the support price at $5.938 offers a potential floor, the resistance at $6.878 seems unlikely to be breached in the near term. Therefore, a short position on Toncoin appears more promising. A suitable entry price would be around $6.35, aligning with the current price and the downward trend. The stop loss should be set at $6.40, slightly above the entry price, to minimize potential losses if the price unexpectedly surges. The target price could be set at $6.1, anticipating a moderate decline based on the forecast. This strategy allows for capitalizing on the potential price decrease while managing risk effectively within a short-term timeframe. Based on the provided price history and forecast for Cardano, a short-term investment strategy focusing on a long position appears to be the most suitable. The historical price data reveals a general upward trend, albeit with some fluctuations. The current price is hovering near the support level of $1.0217, suggesting a potential for further upward movement. The forecast prices indicate a gradual increase over the next week, reaching $1.19. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, around $1.1. The stop loss should be set at $1.03 to limit potential losses if the price unexpectedly drops below the support level. The target price should be set at $1.22, aiming to capitalize on the forecasted price increase and reach the resistance level. This strategy allows for a potential profit while mitigating risk through a well-defined stop loss. Given the price trends and forecast for Litecoin, a medium-term investment strategy appears suitable. The historical prices demonstrate a fluctuating pattern with recent dips, aligning with the forecast indicating a slight upward movement. While the price is currently near the support level, the forecast suggests a potential for growth towards the resistance level. Therefore, a long position is recommended to capitalize on this potential upward movement. An ideal entry price would be around $120, slightly below the current price and above the recent support level. The stop loss should be set at $110, safeguarding against a significant price decline. The target price could be set at $130, aiming for a profit within the projected price range. This strategy allows for a balanced approach, capturing potential gains while mitigating risk. Based on the provided historical and forecast prices for Doge-Coin, a bullish investment strategy appears to be the most suitable approach. The historical price data reveals a consistent upward trend, with recent prices hovering around $4.46. The forecast further strengthens this bullish sentiment, projecting a continued upward trajectory over the next week, reaching as high as $5.09. This suggests a strong potential for Doge-Coin to appreciate in value over the short term. Therefore, a long position is recommended for an aggressive short-term investment strategy. The entry price should be set at $4.46, aligning with the current market price. To manage risk, the stop loss should be placed at $4.23, the recent low point in the historical data. The target price should be set at $5.01, a conservative level that aligns with the forecast's projected high. This strategy aims to capitalize on the anticipated upward momentum of Doge-Coin while mitigating potential downside risk. Aptos's recent price history shows a slight downward trend, hovering around the $13 to $14 range. The forecast suggests this trend might continue, with prices potentially settling around $13 for the next week. Considering these factors, a short-term short position strategy seems most suitable. To implement this strategy, we can set an entry price at $13.50, a stop loss at $14, and a target price at $12.50. This strategy capitalizes on the potential for a price dip while limiting potential losses by setting a stop loss above the entry price. The target price is set below the support price, aiming to capture a reasonable profit from the anticipated downward movement. Based on the provided price history and forecast for SE, a cautious short-term investment strategy appears most suitable. The historical prices exhibit a fluctuating pattern with a recent downward trend. The forecast also suggests a continued downward trajectory, indicating a potential bearish outlook. Given these factors, a short position on SE seems advisable. To implement this strategy, an entry price of 61 cents could be considered, aligning with the recent price action and the lower end of the forecast range. A stop loss should be set at $0.644, the highest recent price, to limit potential losses. The target price could be set at $0.575, aligning with the historical support level and providing a realistic profit target. This strategy allows for a potential profit while managing risk through a well-defined stop loss. Based on the provided Ethereum Classic price information, a short-term investment strategy focusing on a long position appears promising. The historical price data reveals a fluctuating trend, but the forecast indicates a potential upward movement towards the resistance level. The current price sits comfortably above the support price, suggesting a strong base for potential growth. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current price of $33. A stop-loss order should be placed at $30.20, the support price, to limit potential losses. The target price for this strategy is set at $34.06, the resistance level, aiming to capitalize on the potential price increase. This approach leverages the forecast's upward momentum while safeguarding against significant downside risk. Based on the provided Polygon price history and forecast, a short-term investment strategy appears to be the most prudent approach. The recent price action suggests a potential pullback after a period of growth. While the forecast indicates a slight upward movement, the historical price data reveals a recent decline, and the current price is hovering near the support level. Therefore, I recommend a short position on Polygon with an entry price near $0.623. The stop loss should be placed at $0.657, slightly above the predicted lowest price, to minimize potential losses. The target price could be set at $0.581, aiming to capitalize on the potential downward movement towards the support level. This strategy allows for the possibility of profit while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for AEVO, a cautious investment strategy would focus on a short-term approach. The historical prices show some volatility, with a recent decline towards the support price. The forecast suggests a slight upward movement, but the overall trend remains uncertain. Considering the volatility and lack of a clear direction, a short-term investment horizon is more suitable. For this strategy, a long position could be considered, aiming to capitalize on the potential upward movement predicted by the forecast. The entry price could be around $0.495, slightly above the recent support price and below the immediate resistance. The stop loss should be placed at $0.4673, the support price, to limit potential losses. The target price could be set at $0.516, the recent resistance level, aiming to capture a moderate profit if the price moves in the predicted direction. This strategy balances risk and reward, allowing for potential gains while minimizing the downside exposure. Based on the provided optimism price history and forecast, a short-term investment strategy appears most suitable. The historical price data shows a recent dip followed by a slight rebound, indicating volatility. The forecast predicts a gradual increase in price over the next week, suggesting a potential for short-term gains. Therefore, a long position is recommended, aiming to capitalize on the predicted upward movement. An optimal entry price would be around $2.55, slightly below the current price, allowing for some margin of safety. The stop loss should be set at $2.203, the support price, to limit potential losses. The target price could be set at $2.68, aligning with the forecast and offering a reasonable profit margin. This strategy allows for participation in the potential short-term price increase while managing risk through a well-defined stop loss. Based on the provided price history and forecast for STRK, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a volatile trend with periods of both upward and downward movement. While the forecast suggests a slight decline in the coming week, the support price of $0.6163 offers a potential floor for the price. This indicates that a short position might not be the most prudent choice, as the potential for a rebound exists. Therefore, a long position with a strategic entry point around the support level of $0.6163 would be advisable. A stop loss could be placed slightly below this level, at approximately $0.6100, to minimize potential losses. The target price could be set at $0.6613, the resistance level, aiming to capitalize on any upward momentum. This strategy allows for a measured approach, taking advantage of potential price increases while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Solana, a short-term investment strategy focusing on a long position appears suitable. The historical prices show a fluctuating pattern with a slight upward trend. The current price is relatively close to the support price, suggesting potential for a bounce back. The forecast indicates a gradual increase in price over the next week, aligning with this upward momentum. Therefore, an aggressive short-term investment strategy could involve entering a long position at the current price of approximately $224. A stop-loss order could be placed at $213.67, the support price, to limit potential losses. The target price could be set at $230, slightly above the forecast high, allowing for profit taking before any potential price correction. This strategy capitalizes on the anticipated upward movement in the short term while managing risk through a well-defined stop-loss order. Based on the provided price history and forecast for Jupiter, a short-term investment strategy appears most suitable. The historical data shows a volatile trend with recent price fluctuations. The forecast indicates a slight upward movement, suggesting a potential for short-term gains. Considering this, a long position is recommended. An entry price around $1.12 aligns with the current price and the forecast's upward trajectory. To manage risk, a stop loss should be placed at $1.08, below the recent support level. A target price of $1.16, slightly above the forecast's highest point, allows for capturing potential profits within a short time frame. This strategy capitalizes on the anticipated price increase while mitigating potential losses. Given the price trends and forecast for render, a medium-term investment strategy appears most suitable. The historical prices demonstrate a consistent upward trajectory, with the current price hovering near the support level of $8.945. The forecast suggests further price appreciation, potentially reaching $9.75 within the next week. Therefore, a long position is recommended to capitalize on this potential upward movement. An entry price of $9 would allow you to buy in at a slightly higher point than the current support level, while still benefiting from the forecast's upward trajectory. A stop loss at $8.85 would protect against any sudden price drops, while a target price of $9.70 would allow you to take profits near the upper end of the forecast range. This strategy balances risk and reward, aiming to capitalize on the medium-term bullish outlook for render. Solana name service's recent price history shows some volatility, with a peak around $0.395 and a recent dip below $0.300. However, the forecast suggests a slight upward trend over the next week, with prices potentially reaching around $0.340. Considering the support price at $0.2985, a long-term investment strategy might be suitable. The current price sits comfortably above the support level, indicating potential for further growth. Therefore, I recommend a long position on Solana name service for a medium-term investment perspective. An entry price around $0.330 would be appropriate, allowing you to buy in at a relatively attractive price. Set a stop loss at $0.310 to protect your investment from significant downside risk. A target price of $0.350 offers a reasonable profit potential while aligning with the forecast's upward trajectory. Remember, this is just a suggestion based on the available information, and conducting thorough research and considering your own risk tolerance is crucial before making any investment decisions. Based on the provided Doge-Coin price information, a cautious investment strategy is recommended. The 2-week price history shows some volatility but lacks a clear upward or downward trend. The forecast suggests a slight increase in price over the next week, hovering around the current support level. Considering the price action and forecast, a long position is potentially suitable for a short-term investment strategy. An entry price around $0.408, aligning with the recent price action and the support level, would be prudent. A stop loss could be set at $0.397, just below the historical low in the provided data, to minimize potential losses. The target price could be set at $0.435, aiming to capture the potential upside movement indicated by the forecast. This strategy allows for a limited risk exposure while aiming to capitalize on the potential for a short-term price increase in Doge-Coin. PEPE shows a recent price consolidation pattern with a slight upward bias. The 2-week price change demonstrates a fluctuating trend with no significant upward or downward momentum. The forecast price suggests a potential for continued upward movement, albeit with some volatility. Considering this, a medium-term investment strategy with a long position seems appropriate. An entry price around $0.0000245 could be considered, aligning with the current price range and providing a margin for potential price fluctuations. A stop loss at $0.0000235 would help mitigate risk and protect against unexpected price drops. The target price could be set at $0.0000260, aiming to capture a potential price increase towards the resistance level. This strategy allows for participation in the potential upside while managing risk effectively. Based on the provided SHIB new price information, a cautious investment strategy focusing on a short-term approach seems prudent. While the historical prices show some fluctuations, the forecast suggests a slight downward trend in the coming week. The current price is near the support price, indicating a potential for a minor pullback. Therefore, a short position could be considered. An entry price around $0.0000285, aligning with the current price and the forecast, would be suitable. The stop loss should be placed slightly above the entry price, around $0.0000290, to minimize potential losses. The target price could be set around $0.0000275, anticipating a modest decline in price. This strategy aims to capitalize on the potential for a short-term correction while managing risk effectively. Given the 2-week price change and the 1-week forecast for Dog with Hat, a short-term investment strategy appears to be the most suitable. The historical price data shows a volatile trend with recent declines. The forecast suggests a continued downward trajectory, with prices potentially dropping towards the support level. Therefore, a short position is recommended to capitalize on this anticipated decline. An entry price of $2.95 aligns with the current price and the forecasted price movement. The stop loss should be set at $3.04, slightly above the current price, to limit potential losses if the price unexpectedly rises. The target price should be set at $2.83, aiming to capture the potential decline towards the support level. This strategy allows for potential profit while managing risk through a well-defined stop loss. Based on the provided price information for Doge-Coin, a short-term investment strategy appears to be the most suitable approach. The recent price history exhibits volatility, with a notable decline from $0.00989 to $0.00743. The forecast prices also suggest a continuation of this downward trend, hovering around $0.00823 in the coming weeks. Furthermore, the current price is close to the support price of $0.007764, indicating a potential bounce back. Therefore, a short position is recommended, aiming to capitalize on the anticipated price decline. An entry price of $0.00818 aligns with the current price and the potential for a short-term correction. The stop loss should be set at $0.00835 to minimize potential losses if the price unexpectedly rises. The target price should be set at $0.007764, aiming to capture the potential dip towards the support level. This strategy allows for a quick profit opportunity while mitigating risk through a well-defined stop loss. Given the current price trend and forecast for NEAR protocol, a cautious investment strategy would focus on a short-term approach. While the historical prices show some volatility, the forecast suggests a slight downward movement in the coming week. The price is currently hovering near the support level, indicating potential for a minor pullback before any significant upward movement. Therefore, a short position seems more suitable to capitalize on this anticipated decline. An entry price of $6.85 aligns with the current price and the forecast. The stop loss should be set at $7, protecting against any unexpected price surges. The target price could be set at $6.60, allowing for a reasonable profit margin before reaching the support level. Given the price trends and forecast for Internet Computer, a medium-term investment strategy focusing on a long position seems appropriate. The historical prices show a slight downward trend, but the forecast indicates a potential for stabilization and slight upward movement in the coming weeks. The current price is near the support price of $11.791, suggesting a possible buying opportunity. Therefore, an investment strategy for Internet Computer could involve entering a long position at the entry price of $12. The stop loss should be set at $11.80 to protect against further price declines. The target price should be set at $13.70, aiming to capitalize on the potential upward movement indicated by the forecast. This strategy allows for a medium-term investment horizon, allowing the price to potentially reach the target while mitigating risk with a well-defined stop loss. Based on the provided information for Injective, a short-term investment strategy appears to be the most suitable approach. The 2-week price history demonstrates a fluctuating trend, with recent fluctuations suggesting potential for further volatility. The forecast price remains relatively stable around $29, indicating a lack of strong upward momentum. However, the price is currently near the support level of $27, suggesting a potential for a short-term bounce. Therefore, a short position is recommended, aiming to capitalize on the potential for a pullback in price. The entry price should be set at $29, aligning with the forecast price. The stop loss should be placed at $30, slightly above the entry price, to limit potential losses. The target price can be set at $27, aiming to capture a potential decline towards the support level. This strategy leverages the current price proximity to the support level and the forecast indicating limited upward potential, aiming for a short-term profit from a potential price pullback. Based on the provided price information for BTC, the historical data reveals a fluctuating trend with recent downward pressure. The forecast price suggests a continuation of this downward trend over the next week, reaching levels below the current price. Considering this bearish outlook, a short-term investment strategy focusing on a short position appears suitable. An entry price around $575, aligning with the forecast and near the current price, would be appropriate. A stop-loss order placed at $596, slightly above the entry price, would help mitigate potential losses if the price unexpectedly rebounds. The target price should be set at $558, the lowest point in the recent historical data, aiming to capture a significant portion of the anticipated price decline. This strategy capitalizes on the expected downward momentum while managing risk through a well-defined stop-loss order. Given the historical price data and the provided forecast for THETA network, a short-term investment strategy appears to be the most suitable approach. The recent price action shows some volatility, but the overall trend suggests a potential upward movement. The forecast predicts a gradual increase in price over the next week, reaching levels above the current market price. Therefore, a long position on THETA network is recommended. An aggressive entry price could be around $2.75, aligning with the recent price action and the lower end of the forecast. A stop loss should be placed at $2.60, providing a buffer against unexpected price drops. The target price could be set at $3.05, aiming to capitalize on the forecasted price increase while staying below the resistance level. This strategy allows for potential profit from the anticipated upward movement while managing risk with a defined stop loss. Based on the historical price data and the provided forecast for WorldCoin, a cautious short-term investment strategy appears most suitable. The recent 2-week price change demonstrates volatility, with a period of decline followed by a slight recovery. The forecast suggests a continued upward trend, but the magnitude of this increase appears limited. Considering the support and resistance levels, the price is currently positioned near the support level of $2.836, indicating potential for further downside movement before a sustained upward trajectory. Therefore, a short position with a conservative approach is recommended. The entry price could be set at $3.07, aligning with the current price and allowing for a small buffer above the support level. The stop loss should be placed at $3.13, slightly above the entry price to minimize risk. The target price could be set at $2.92, capitalizing on the potential for a decline towards the support level. This strategy aims to profit from a short-term correction within the overall upward trend of WorldCoin. The historical price of Hooked Protocol shows volatility, ranging from a low of $0.521 to a high of $0.686. The forecast suggests a potential decline in the coming week, with prices hovering around the 58 cents range. Considering the downward trend and the support price at $0.521, a short-term bearish strategy seems appropriate. Therefore, an investment strategy for Hooked Protocol would involve taking a short position. The entry price could be set at 60 cents, allowing for a buffer above the current price. The stop loss should be placed at $0.615 to limit potential losses if the price unexpectedly rises. The target price could be set at 55 cents, aiming to capture the potential downside movement suggested by the forecast. This strategy capitalizes on the short-term bearish outlook for Hooked Protocol while managing risk through a well-defined stop loss. Artificial Superintelligence Alliance's recent price history shows a volatile trend with fluctuations above and below the support price of $1.685. While the forecast predicts a slight downward movement, the price remains close to the support level and the resistance is not too far away. Given this context, a short-term investment strategy with a bullish outlook appears appropriate. An entry price of $1.78, slightly above the current price and close to the support level, would allow for potential upside movement. The stop loss should be placed at $1.73, slightly below the recent lows, to mitigate risk. The target price can be set at $1.82, aiming to capitalize on the potential price increase towards the resistance level. This strategy aims to capitalize on a potential short-term rally in Artificial Superintelligence Alliance, taking advantage of its proximity to the support level and the forecast indicating a slight upward movement. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $8.389. The forecast indicates a further decline in price over the next week, suggesting a potential for short-term profit. A short position is advisable to capitalize on this anticipated decline. For an aggressive short-term investment strategy, an entry price of $8.95 could be considered, aligning with the current price and the forecasted decline. The stop loss should be set at $9.074, the resistance level, to protect against any unexpected price surge. The target price should be set at $8.46, slightly above the historical low of $8.389, allowing you to take profits before the market hits major support. This strategy aims to capitalize on the anticipated price drop while mitigating potential risks. Given the price trends and forecast for Filecoin, a conservative investment strategy would focus on a medium-term approach. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. However, the price is approaching its support level of $6.19, which could signal a potential buying opportunity. The resistance is at $6.742, indicating that there is limited upside potential in the near term. Therefore, a long position is advisable with an entry price of $6.25, slightly above the support level. This allows for some margin of safety while still capturing potential upside if the price rebounds. The stop loss should be set at $6.15 to limit potential losses. The target price should be set at $6.60, aiming for a moderate profit before the price potentially faces resistance again. This strategy balances risk and reward, aiming to capitalize on a potential rebound while protecting against further declines. Based on the provided price history and forecast for Conflux, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data shows some volatility but generally trends sideways. The forecast suggests a slight downward movement in the coming week. While the price is currently near its support level, there's potential for further decline. Therefore, a short position could be considered, aiming to capitalize on the potential price drop. An entry price around $0.215, close to the current price and slightly above the support level, would allow for a reasonable margin of safety. The stop loss should be set at $0.221, slightly above the entry price, to limit potential losses. The target price could be set at $0.198, aligning with the support level and offering a reasonable profit potential. This strategy allows for a medium-term investment horizon, allowing the price to potentially move towards the target while managing risk through the stop-loss mechanism. Given the price trends and forecast for Ethereum name service, a bullish investment strategy would focus on a medium-term approach. The historical prices show a general upward trajectory, with the current price hovering around the forecasted price. While there are minor fluctuations, the overall trend suggests potential for continued growth. The forecast indicates a steady increase in price over the next week, reaching potentially higher levels. Therefore, a long position is advisable to capitalize on this potential. An entry price of $41 would be suitable, aligning with the current price and the forecasted price for the next few days. A stop loss should be placed at $39 to protect against unexpected price drops, and a target price of $47, slightly above the highest forecasted price, would allow for a good profit margin. This strategy allows for capturing potential gains in the medium term while managing risk effectively. Based on the avalanche price history and forecast, a short-term investment strategy appears promising. The recent price action shows a consolidation phase after a significant drop, with prices hovering around the support level of $44.63. The forecast indicates a potential upward movement towards the resistance level of $53.23. Therefore, a long position is recommended for a short-term investment horizon. An ideal entry price would be around $49.50, slightly above the recent consolidation range. A stop-loss order could be placed at $44.63, safeguarding against a sudden drop below the support level. The target price could be set at $53, aiming to capture a portion of the anticipated upward movement. This strategy leverages the potential for a short-term price surge while minimizing risk through a well-defined stop-loss order. Given the price trends and forecast for Bitcoin, a cautious investment strategy would focus on a medium-term approach to capitalize on the potential for modest upward movement. The historical prices show a fluctuating pattern, with the current price hovering near the support level of $0.05565. The forecast suggests Bitcoin could rise slightly over the next week, reaching around $0.0665. This indicates a sideways to slightly bullish outlook in the medium term. Therefore, a long position is advisable for a medium-term investment strategy. An entry price of $0.0586, slightly above the current price and near the support level, allows for a margin of safety. A stop loss at $0.05565, aligned with the support price, protects against significant downside risk. The target price could be set at $0.0665, aligning with the highest forecasted price, allowing you to capture potential gains from the predicted upward movement. Based on the provided information for PENDLE, a short-term investment strategy appears most suitable. The forecast suggests a gradual increase in price over the next week, with a potential peak around $6.38. While the price history exhibits some volatility, the support price at $5.924 provides a safety net for potential dips. Therefore, an aggressive short-term investment strategy would involve entering a long position at the current market price, which is slightly below the predicted high. A stop loss could be set at $5.924, aligning with the support price, to limit potential losses. The target price should be set around $6.38, aiming to capitalize on the predicted price increase. This strategy leverages the expected upward momentum while minimizing risk by establishing a clear stop-loss point. Based on the provided The Sandbox price data, a short-term investment strategy appears most suitable. The recent price history exhibits volatility, with a clear downward trend in the past 2 weeks. The forecast price also suggests a continued downward trajectory, indicating a potential bearish outlook for the short term. Therefore, an investment strategy focused on a short position in the sandbox is recommended. A suitable entry price would be around $0.749, aligning with the current price and recent support level. The stop loss should be placed at $0.793, slightly above the recent resistance level, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $0.699, the lowest support price mentioned, allowing for a decent profit margin if the bearish forecast plays out. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach to navigate the volatile market. The historical prices show a recent downward trend, with the current price hovering near the support level of $0.5921. The forecast suggests a continued decline, with prices potentially falling below $0.673 in the coming weeks. Therefore, a short position is advisable to capitalize on the anticipated decline. An entry price of 64 cents would allow you to enter the trade near the current market price, while a stop loss at 66 cents would protect against any unexpected price surges. The target price should be set at $0.595, slightly above the support level, allowing you to take profits before the price hits major support. This strategy prioritizes risk management and aims to capitalize on short-term price movements within a volatile market. ENG Coin shows a recent downtrend with the price falling below its recent support level. The forecast indicates a continued downward movement, suggesting a bearish outlook for the short term. Based on this information, a short position on ENG Coin appears to be the most suitable strategy. To implement this strategy, we could enter a short position at the current price of around $0.304. The stop loss should be placed at $0.326, slightly above the recent high and the first level of resistance. This protects against unexpected price surges. The target price could be set at $0.2756, which represents the next significant support level. This strategy aims to capitalize on the anticipated price decline and secure profits before the price potentially rebounds. Given the price trends and forecast for Uniswap, a medium-term investment strategy appears most suitable. The historical price data shows a slight upward trend, with the current price hovering near the support level of $15.233. The forecast indicates a continued upward trajectory, suggesting potential for further gains. However, the resistance level of $17.711 presents a potential ceiling for the near future. Therefore, a long position is recommended for a medium-term investment horizon. An entry price of $16 would allow you to buy in at a reasonable level, taking advantage of the current price being close to the support level. The stop loss should be set at $15.50 to protect against any unexpected price drops. The target price could be set at $17.50, aiming to capture a significant portion of the potential upside before reaching the resistance level. This strategy balances risk and reward, allowing for potential profit from the anticipated price increase while mitigating potential losses. Given the price trends and forecast for Chainlink, a short-term investment strategy appears to be the most suitable. The historical prices show a consistent upward trajectory, with the current price close to its forecast and near the support level of $26.33. The resistance is at $29.32, indicating that there is still some room for upward movement in the short term. A long position is advisable to capitalize on this potential price increase. For an aggressive short-term investment strategy, an entry price of $28.50 would be ideal, allowing you to buy in before the price potentially reaches the resistance level. The stop loss should be set at $26.50 to protect against any unexpected price decline. The target price should be set at $29.20, allowing you to take profits before the price potentially reaches the resistance level. Given the provided price history and forecast for Aave, a medium-term investment strategy appears most suitable. The historical data reveals a general upward trend, with recent prices hovering around the support level of $283.03. The forecast indicates continued upward momentum, with prices projected to reach $419 within the next few weeks. This suggests a potential for significant gains over a medium-term horizon. Therefore, a long position on Aave is recommended. An entry price of $300 would allow you to buy in at a relatively attractive level, while a stop loss at $285 would protect against unexpected price drops. The target price should be set at $400, aiming to capitalize on the forecasted upward movement and achieve substantial returns within the medium-term timeframe. This strategy balances risk and reward, taking advantage of the positive price trends while mitigating potential losses. Based on the provided information for EOS, a short-term investment strategy appears to be the most suitable approach. The recent price history shows volatility, with a notable decline from $1.36 to $1.04 in the past 2 weeks. While the forecast predicts a slight upward movement, the price remains below its recent resistance level of $1.3637, suggesting limited upside potential in the short term. Therefore, a short position on EOS is recommended. An entry price around $1.08, slightly above the current price, would allow for potential profit as the price potentially retraces towards the support level of $1.0388. The stop loss should be set at $1.12 above the entry price to mitigate risk. The target price can be set at $1.02, aiming for a modest profit within the short-term timeframe. This strategy leverages the potential for a price correction while limiting downside risk. Tron's recent price history shows volatility, but the overall trend appears sideways to slightly bearish. The forecast suggests a slight upward movement in the coming week, but the price is still hovering near the support level. Considering the short-term price action and the forecast, a neutral to slightly bullish strategy seems appropriate. Therefore, I recommend entering a long position at the entry price of $0.285, aiming to capitalize on the potential upward movement towards the resistance level of $0.2971. The stop loss should be placed at $0.2694, the support level, to minimize potential losses. The target price can be set at $0.318, which aligns with the higher end of the forecast range and offers a reasonable profit potential. This strategy balances risk and reward, allowing for potential gains while mitigating the downside risk. Given the historical price data and the forecast for Suncoin, a short-term investment strategy appears to be most suitable. The recent price action shows some volatility, but the forecast suggests a slight upward trend in the coming week. Considering the support price of $0.02388 and the resistance price of $0.0261, a long position could be considered. An entry price of $0.0255, near the current price, would allow you to capitalize on any upward movement towards the resistance level. A stop loss at $0.0245 would protect against significant downside risk, while a target price of $0.0262 aligns with the forecast and offers a reasonable profit potential. This strategy aims to capitalize on the potential for a short-term price increase while managing risk effectively.